I will summarize the last year and I will provide some views into next year. We will be talking about asset class, student housing asset class, and its broader micro-living asset class that is actually the most preferred alternative asset class out of all the alternatives by a recently published CBRE survey. Investors' intention survey 2 days ago. So 52% of investors plan to be engaged in alternatives this year, and out of them, student housing is by far substantially most popular out of the alternative asset classes. I will take it. We are an independent research provider focused on student housing and micro-living. We provide independent, unbiased data. We don't take part in transactions, so we have no story. We provide data and research for UK, EU, Asia, Australia, and Latin America plus Canada. We are in 20 countries, monitor more than 100 cities, more than 5,000 PBSA buildings, 1 million beds, and 8 million mobile students that are target audience for these beds, 4 offices and 50 researchers in the company to cater for this asset class to the depth that needs for transparency. We are a member of the United Nations as well as the Research Association SMR, which makes us to conduct the research not only independently and unbiased, but to the highest possible standards. So, asset class and where it is. After 5 years, a very rapid development in Australia, 10 years in the EU, and 15 years in the UK. We are monitoring more than 600 student housing companies these days, with more than 100 portfolios. We are reaching over 10 billion transaction levels globally. As I mentioned, there are 350 projects to be coming to the market with a permit and or under construction in the next 2.5 years, which equals roughly 15 billion of the capital. As I mentioned, out of the 19 alternative asset classes, student housing is the #1 in terms of popularity in Europe and #4 globally. It represents 2% of the global transactions. It is considered to be revenue delivering asset class even at the end of a cycle. We will get there in more details. And the yields are higher than the mainstream asset classes, somewhere in between 100 to 250 points. The modern competitive PBSAs reach 90 to 100% occupancy, so if the product is right, there are tenants. The average provision rates, so all beds to all students, is about 16% in Europe. When we exclude the UK, it's 11%, which means that there is roughly 1 bed to 10 students. So demand is really strong, but the best news is that the demand from students is growing faster than supply of beds. So even though we have more than 105,000 beds coming to the market in the next 2.5 years, the growth of students is faster. So the most important information, students. As you can see, this is a breakdown of students in Australia, US, and Europe. International students, so internationally mobile students, who are the primary target audience for private PBSA. So those who need to be mobile internationally. And as you can see, number of those students is increasing regardless of economic cycles. And that's also why we see such an influx of capital to this income and revenue delivering asset class, that even in difficult times 10 years ago, the students were actually increasing the numbers. And not only that, once you're 18, 19, 20, you go to study anyway, no matter a recession, but also in these difficult times, people actually turn to study more. The key trends to analyze the overall development in the asset class, 3 of them, the super trends. First, on the left, it's an increasingly attractive asset class, so we see increased liquidity and consolidation. Second, we see increased demand for better product. So not like the provision or saturation of the market would be at critical numbers. It is not, especially in Europe. But the product is increasingly more important. So what the communal areas are the key, rather than furnishing of the room. And as the later research will show you, the 10 to more than 10 or 15 amenities per building are becoming a standard. So it's nowhere close to dormitories that we studied in a couple of years ago, but it is much more a modern, competitive, 21st century, often state-of-the-art private stock that the students are looking for. And third, we see more and more hybrid products, so student housing with micro-living, so apartments within the student housing buildings for young professionals, graduates, so those 23 to 30 years old who basically stay in the city and live with similar type of structured accommodation, but better equipped, larger rooms, and therefore better rates to be charged. As I mentioned, in certain territories, and the more eastern we go and the more we go to tier 2 cities, the higher yields we see in student housing, and it actually sits about the mainstream asset classes across the markets. But as I said, tier 2 and Central Europe deliver better returns recently. Now, provision. So what's the saturation of the market? I have 3 ratios for you. It's total beds to total students. This is usually the industry standards across the continents, how it is measured, to have one benchmark. So as we can see, we have cities from the UK, Australia, West Europe, East Europe. And as you can see over here, the average provision rate, so how many beds we have for all students, is about 16%. When we exclude the UK, it's 11%. Well, when you look at the UK itself, it's in between 20 to 30%, mostly about 25%. In US, which is the most mature market, it's often about 30%. In other words, in the UK, we have usually 1 bed for 3 students. In Europe, 1 bed for 10 students. What is more important and more relevant are these 2 ratios you can see on the screen. Let me explain first the one you see on the right, or the light blue. This is a ratio of all beds in private PBSAs to all mobile students. Mobile student is the one that needs a bed. So it's either international student or domestic student not residing with parents or in the city normally. So when we calculate all the mobile students, domestic and international, compare it to beds, then we see that the percentages are relatively low, and we have in the UK roughly one bed for 5 such students, and in Europe 1 bed for 20 such mobile students. So it means that private stock in Europe is pretty low. When we look at the left one, so beds in private PBSA versus international students only, which is more of a case in continent, in Europe, then the ratio is 1 to 3 in the UK and 1 to 10 in continental Europe. Means that when we do the benchmark, Europe is pretty safe and has a long way to the roof. And it's much more about what kind of a product should be delivered in what kind of a city or district or near what university. So what's going on and what we can expect in 2019 and 20? Well, before I analyze the graph over here, we can say that, let's recap, students are there even in economically difficult times, and they grow. Mobility globally increases, barriers lessen, so it's less visa, more work rights, perhaps except some of the destinations that build barriers, like we see recently in the United States, or those who don't move away the barriers, like the UK. So they might not grow that much, but still we see overall tendency to increase the mobility and put away the barriers. The reasons to study abroad are stronger and larger. Most of the mobility is driven with the gap in between the economics and education. Like in Vietnam, there are 1,000 more millionaires over the last 5 years that want their kids to have a great education. So the increase in economics and well-being is faster than the increase of quality of education locally. So that gap drives people away and study abroad, and that gap is widening. So there are more and more reasons to study abroad. And most importantly, as we can see on the map, destinations learned that the international students are good for them because they deliver revenues, they deliver talent for employers after graduation, and for the cities they deliver lifetime taxpayers if they stay and live for life. So there are strategic plans, 5 years, 10 years, there are marketing budgets, there are targets, as you can see. These targets have been achieved already or overachieved, like in Germany or Australia, and there are new targets for 2025, like in Australia, to get close to 1 million international students from 660 now. So altogether, we can expect more students in most of the destinations, and even the non-traditional destinations like Japan or Korea are part of a pie now and put strategies and budgets to attract international students. Concerning the time, I skipped this one, but you will see it at home when you will be having this presentation available, the most undersupplied cities in Europe. To explain why this is happening and why Europe is the destination of future most likely. 5 reasons. First, there are many more English taught programs now in Europe, as you can see. So in less than 10 years, from 55 to almost 3,000. So Europe has become competitor to English-speaking destinations. Second, there is low or no tuition for international students in many of the European countries or provinces or states. Third, the cities and universities are proactive. They go out, they do trade missions, recruitment missions, fam trips, and they promote themselves to attract international students. Fourth, the number of ranked universities in the continent is increasing, while the number of ranked universities in the UK is actually increasing. US is still doing very well. But the last and most important one is that European destinations, many of them enable students to work during the study and after study, and welcome students to stay, as they consider this as the elegant way of immigration and attracting talent to their citizenship. I'll skip these 2 slides. These are about activities of particular cities and universities. What do they do and how active they are. Another thing is there is a lot of money in the EU funding contribution schemes like Horizon. So you see that particular universities have a lot of funding that enables them to do more in terms of increasing their research programs, rankings, and therefore later number of students. Let me give you a bit more of a granular look. In student housing, not necessarily the countries, but rather the cities are considered to be markets, as they differ from each other more than countries themselves. And when we look at on the selected cities, this is not the ranking, please don't consider it as a top 15 cities, but a selection of the city to show you what's the level of demand from international students. And and give you key criteria that play the role in how many students are in the city. It's a size, it's ranking, so how many ranked universities they have. It's the popularity index, like you can see in QS rankings, so how the cities are popular by students. Then marketing, and finally living costs, or tuition and living costs. And we can see the tier 1 cities like London, Paris, Vienna, There are about 50,000+ international students, but most of the cities have about 10 to 20,000 international students. We have some of the cities we call tier 1 in terms of population, but tier 2 in terms of population, so they are small, like Aachen, Heidelberg, but tier 1 in terms of academia, so they have a big student population. And these cities actually become more and more popular for investment in the asset class, because even though they look small in terms of overall citizen population, they are pretty large in terms of student population. Supply. In general, the supply is low. It's building up, but it's not catching up with the growing demand. We can see some total bets over here per city, some selected cities you can see over here. The major activity in terms of new supply coming to the market after quite of a boom in UK and Netherlands and Germany. The most activity we see now is now in Spain and Italy, and Central and Eastern Europe is shaping up quite a lot. So Vienna, Warsaw, Wrocław, Budapest, Prague, etc. Monthly rent in private PBSA. So the European average is €600 per month. Obviously, we could have another session on what is included or not. But West Europe is about 600 to 800. Central and Eastern Europe is 400 to 600 levels, so 50% less than Western Europe. However, the capex and opex difference in Western and Eastern Europe is not as huge as the difference in price. Therefore, more and more investors coming to Central and Eastern Europe to benefit from this difference. Product. It's a state of the art. The concept in Europe is slightly different from the one we see in US. It's multi-institutional, so it needs to be on the crossroad of the student flows. It's not dedicated to one institution or few, but many. There should be attractive price, so the value to price ratio is increasingly more important. Then usually in a very sort of premium location that has certain status loci, and then it usually is a state-of-the-art building. So when you will see the concept, they probably market leaders in architecture. Product. That's probably the most frequently mentioned sentence, that you need to get the product right. That's the mantra of these days in student housing. And there are many amenities to choose from for students or their preferences. Like we see over here, be it bike room, laundry room, study room, then room cleaning, game room, and many others. Out of those 5,000 properties, we have seen that there are really some unique selling points in some properties. But what we wanted to show you at this presentation is that the cities differ. The preferences of students by city differ. So we do student surveys in the cities. We're asking them what they're having and what would they like to have to navigate the product. And you can see that the differences are quite great, and therefore it's important to have it right per city, not in general. This is an example from Vienna on amenities. So there are 117 PBSAs in Vienna. By PBSA, we mean any kind of structured student accommodation, public, private, religious. Out of which we segmented out the ones who have less than 5 amenities, then 5 to 10 amenities, and more than 10. And those who have more than 10 are actually considered as a sort of special segment, so-called competitive stock, or the modern competitive PBSA. Well, and there are only 10 in the entire city. So as you can see that when it comes to private competitive stock, it's not that rich, even in a city like Vienna. So, and on the right side, you can see a result of the primary street level survey over the representative sample of students in Vienna. So what matters the most to them? And I would focus your your attention to the number 1 and number 5. Number 1, facilities and the residence. So this confirms that communal areas are more important than what you see on the number 5, room furnishing or equipment. So communal areas seem to be all over, be it Europe, UK, Australia, more important than individual rooms. Portfolios, probably it's too enlightened, so you might not see that much. But out of the all the country, cities, and PBSAs, we put them together to an analysis and portfolio. Portfolio is something that has more than 500 beds and more than 2 buildings. We have 107 portfolios with this definition in Europe, including UK. But what we wanted to show you is that most of them are small. So 44 of them are up to 1,500 beds, 38 up to 5,000 beds, and only 25 of them are larger than 5,000 beds. Means that the consolidation is only at the very beginning. And we can expect in 2019 and 20 more of this, especially in conjunction with institutional money coming in. I'll skip this. This is the pipeline for European cities, so you can see how many beds are in particular cities coming to the market in the next 2.5 years, which is the foreseeable future. You will see also a map, if you don't know. These are also examples. This is not top 15 cities, but selected ones to see the caliber of the pipeline. And last slide, to leave you with what I started, a case study, Berlin, provision rate projection, so how many students and how many beds are coming to the market. We can see that's what's called the provision is number of beds to a number of students. Now it's 9.5 in Berlin. When we factor in all new students and all new beds coming to the market, it will increase from 9.5 to 10% in the course of 5 years. And which is not that much, which is so significant for the current market for most of the 100 cities that are relevant in student housing in Europe. I hope this was somehow useful. Thank you very much for your attention, and let's continue the panel.